Gautam Trivedi, Managing Director and Head of Equities with Religare Capital Market, joins us now. Gautam, good morning. What do you make of yesterday's carnage in financials? Do you think it was more like a knee-jerk reaction, or in the near-term financials as a group they will get derated and the derating has just about started?
I think the derating started a few weeks ago, before the RBI move last week and yesterday. We've obviously been negative on financials for the past few weeks, and more importantly, I think yesterday's move was clearly a reaction to RBI's move the day before evening, when they put in these restrictions to control the fall of the rupee. That seems to be working, and I think at least until the RBI doesn't see evidence of the rupee stabilizing, these will remain in effect, and hence I don't see the financials at any point of time really coming up, unless people start thinking it's bargain hunting. And for example, Yes Bank at these levels, 1.5, 1.6 times price to book looks attractive, and have a longer term view on the market and start acquiring these names. But otherwise, between now and in the near term, I don't see any real reason to buy the financials.
One would often question, why this reorganization when it comes to Holcim and Ambuja, because it clearly doesn't find favor with the shareholders, and there clearly seems to be no advantage really in this reorganization.
No, Aisha, I totally agree with you. I think the market is punishing the stock, given the fact that you have 3,500 crores that have actually gone directly to the parent Holcim. They've clearly overpaid for ACC. If you just look at the pure market cap of ACC, which is about 23,000 crores, 50% of that should amount to 11.5, but they've paid about 15,000 crores. So I think the market is rightly taking this pretty negatively, unless, of course, I think there is a call on either right now or later this afternoon. So unless they have a different version to why they've done so, I think a lot of people did expect, and there was buzz in the market until recently, that there would be a merger of the two companies, not this structure. So I think that is clearly surprising and unfortunate, it seems, at this point.
Would you also avoid ACC now in the same spirit? Because if Holcim can take all the cash out from Ambuja, they can take the cash out from ACC as well.
Absolutely. I mean, our preferred pick actually is Ultratech Cement, so it's not Ambuja or ACC. In fact, our cements analyst has downgraded Ambuja this morning to a sell from a buy.
It's surprising to see that ITC is actually going weak into its earnings. And Gautam, what's your sense? I mean, besides the fact that ITC is going to declare its earnings, do you think that it would only be wise to start, or rather keep taking profits off the table when it comes to names like the FMCG pack, because the run-up has been so significant and valuations definitely have turned expensive?
No, I think you're right, because in the case of ITC in particular, if you look at 15 years ago, the market cap of the company used to be half of Hindustan Lever. Today it's 2x. So the stock clearly has done extremely well over that period of time. And I think if you look at FMCG, and I wouldn't just talk of FMCG alone, I would look at even the pharma names and some of the IT names that are now starting to catch up, are near all-time highs. I didn't realize until this morning that TCS, Tech Mahindra, as well as HCL Tech are also now at new lifetime highs. So I think if you look at these three sectors, which have clearly outperformed year to date, and especially over the last 12 months, I do not see at this point of time any major retreat, because the fact of the matter is at this point investors continue to remain only bullish on these three sectors. Of course, there are other pockets of opportunity, as you were discussing earlier, HMCL or basically the two-wheeler space. But outside of that, bulk of the FI inflows seem to be concentrated in these three sectors. So I don't see ITC coming off significantly, unless, of course, the results are disappointing.
Gautam, if I look at the history of bull market and a bear market, stocks could do crazy things before they top out and before they bottom out. So with that logic, do you think HUL, ITC, TCS, or for that matter, and HCL Tech could really trade at crazy levels before they top out?
I think they could. Yes, the answer is yes. A lot of these stocks are at lifetime highs. In fact, I was talking to one regional fund manager only last week about Hindustan Lever now trading at 42 times forward earnings. And he said, yes, I agree with you, but the fact of the matter is it is the market cap of Hindustan Lever is the same as the market cap of Lever Indonesia, which I didn't know. And then what he went on to add was that Indonesia is a country with a population of only 300 million people. We have about 1.2 years. So with 1.2 billion people, 4x the population, the valuation doesn't seem that expensive. I was startled with that explanation, but I guess somebody sitting outside of India has a very different point of view when picking some of these names. So I think I don't see these stocks retreating at any point of time. Now, of course, the other question, the other side of the coin really to keep in mind is that as and when these stocks do correct, or as and when the economic fundamentals improve and you see money flowing out of these stocks into maybe higher beta stocks, then I think the question really is who's the incremental buyer for these names, because especially in the consumer names, a lot of the domestics have virtually no interest at these valuations. So concern really is who would be the incremental buyer from these levels.
Gautam, it's been quite scary to see what has happened to the banking pack ever since yesterday. What's the right approach? I mean, you've seen names like a Yes Bank fall like 9 pins. Should one start nibbling in? Because whenever the economy recovers, banks would definitely lift up, or do you think there's still a lot of poison left in the system and still a whole lot of downside to go for the banking pack?
I think there is, if not a whole lot of downside, I definitely see some degree of pain still left in the system, especially on the NPL side. Yes, the private sector banks clearly seem to be doing a lot better than the PSUs. But my concern really is, and our concern, should I say, is clearly still that the pain is not over in the overall system. We're not seeing a rebound in the economy, and I wish, we were having this conversation where we saw green shoots, but we're clearly not seeing any of that. So I would not be in a tearing hurry to buy some of these names. I'd hold off.
Gautam, so within the consumer space or the consumption space, where is the risk-reward ratio still favorable, where earning visibility is decent and valuations are not that demanding?
Yeah, I think outside of the FMCG names, or at least the tier 1 names, which are clearly, very, very expensive, we still like the Daburs and the Imamis. I mean, they're not cheap anymore, but they're at least not as expensive and trading at still a significant discount to the ITCs and levers. That's one. The other way to play consumption clearly is two-wheelers, and I think M&M as well in particular, which has come off significantly in the past few weeks. A lot of these stocks are starting to look attractive. Some of the criticism we've got on M&M is that every one of them other is launching an SUV, and our answer to that is yes. A lot of those SUVs seem to be focused on the urban market, and if you look at M&M's strength, besides tractors, the rural SUV market is, I think, clearly where they are very, very strong, given great monsoons, upcoming elections, not just the general elections, but 5 upcoming state elections. M&M's SUVs, I think, will do very, very well. So I think there are different ways to play domestic consumption. I don't think FMCG necessarily at these levels would be a good idea.
Let's look at Workhorse, 617 rupees. That stock, it looks like a bottomless pit for Workhorse, down about 30% in just a matter of 5 trading sessions. Gautam, Workhorse is more cyclical than a metal stock. In 2008, it was a 2-digit stock. In 2003, it was a 3-digit stock. In 2012, it was a 4-digit stock. And now it could be a 2-digit stock again, the way it's falling.
Yeah, I think it's really unfortunate what seems to be happening there. And I think the overall pharma space, I think, seems to be under the scanner of the FDA. I mean, assuming for a minute that whatever the FDA seems to be suggesting is true, it's really unfortunate. And I don't have a better view, frankly, but I think, yes, if this continues, overall investor sentiment is clearly shaken up on this stock. And I think I don't see the stock recovering anytime at this point, at least. I mean, I don't know where this could fall to.
Gautam, you like the story in Infi. What about the rest of the pack, the likes of a TCS or, for that matter, Tech Mahindra, which is holding out?
Tech Mahindra has been one of our top picks for the past 12 months. The stock's done extremely well. We've been pushing this name ever since they announced the merger. Now, with respect to the overall investor sentiment in the Indian IT space, by far TCS remains the top and preferred pick. So I think in spite of the high valuations vis-a-vis even the top 4 companies, TCS, I think, continues to be a preferred choice by both FIs and domestics. Second, we continue to like Tech Mahindra, and I think the stock is still trading at a discount to the big four. And given the fact that it's now the fifth largest Indian IT company, it doesn't deserve to trade at that discount. So I think this stock should be trading up even more. And I think the other way to play this also is look at some of the mid-cap names. And of course, Hexaware is moving up on rumors of potential acquisition at 140. But if that notwithstanding, I think we like a lot of these mid-cap names as well. So I think overall tech will continue to do well.
Gautam, so let's say if you have to make a basket of only 3 large cap stocks or 4 large cap stocks, what kind of portfolio allocation you would do at the current juncture?
Yeah, I think I would still put some money into the FMCGs, but in the tier 2 FMCGs like a Dabur or an Imami, or even a Britannia for that matter. I would look at oil and gas as well. That's a space I think that is looking extremely interesting and attractive. ONGC is our preferred pick. RIL could be interesting, but I think at the current levels, I think the stock seems to have paused, and I think investors in general are a little confused what to do with it from these levels. I think they need clarity and guidance on what production could be in FY15 and FY16, which clearly the company at this point isn't sharing. But whenever it does, I think that's something that a lot of the people on the street will be waiting for. And the telecom launch, I think, obviously, which is eagerly awaited. So I would also add RIL to that list. And I think on the consumption side, like I said, I think Bajaj and HMCL would be the preferred picks. Tata Motors, I think at 270 levels is clearly interesting because the stock's been range bound, and every time it goes from 270, it bounces back to about 310, 315, and then comes back down. So,
right, Gautam, really good chatting with you. Appreciate you taking the time on.